Good morning, everyone, and welcome back to this new edition of the weekly analysis. Let's start, as usual, with a recap of what we witnessed last week, and in particular over the weekend. In short, the indices basically continue to move sideways while keeping an eye on this new situation of the Israeli attack on Iran. In short, Iran's response and everything that can ensue, especially in short on oil, and also as a consequence of what then happened over the weekend with the new attack, and above all with the United States entering the field alongside Israel. So this means that, in short, the factors in favor of Israel are currently greater. So much so that the Tel Aviv Stock Exchange has surged and broken its all-time highs, precisely as a result of the United States stepping in. Evidently, then market participants are pricing in that the intervention of the United States is definitely, in short, decisive in determining the outcome of this conflict, with a good probability, as we are already seeing. In fact, we saw an opening last night with a gap, obviously a gap down, but frankly nothing nothing excessively dramatic. In fact, after this gap opening, all the global indices, probably driven by the Tel Aviv Stock Exchange, which is certainly the most directly affected by this conflict, have basically recovered the loss accumulated at the opening, and now they are even trading slightly above Friday's closing level. So this should make us it should make us reflect. It should make us pay attention to all these factors, because right now it's crucial to keep an eye on this conflict, which is definitely market driven at the moment, so we absolutely need to be careful about this. From a macroeconomic perspective, let's take a quick look at the economic calendar for this week, of course. Let's start with today. Just a second. Here it is. Let's start with today. There are some European data points that have already been released this morning. And then in the afternoon, we have the US manufacturing PMI, which is quite important. There's also Lagarde's speech. Then we have the services PMI, and in my opinion, another important factor is the existing home sales data. This is for the early afternoon. Then in the evening there are various scheduled speeches by FOMC members, several talks that definitely deserve some attention. Tomorrow, I think there's a US auction for the 7-year Treasury bonds, and also for the 2-year, so two important auctions. After that, there is a speech by Collins, who is a Fed member, and in the early afternoon, there is nothing. Then we move on to Wednesday. Wednesday, the day already week, starts to get a bit more intense from a macro data perspective. We have the usual oil data and basically Powell's speech shortly after the market opens. So Wednesday will definitely be an interesting day as well. Then we get to Thursday, where we have the GDP data, which is definitely highly anticipated to try to understand what developments might be ahead, as well as the initial jobless claims. So this Thursday we'll have several important data releases, and then to wrap up, once again, Lagarde will be speaking in the evening. On Friday instead, let's take a look. We have the index of personal spending and the index of consumption. So definitely a day that could be interesting. Even if Friday isn't particularly packed with data, Perfect. Having done this recap from a macro perspective of the news and the data expected to reach the market, let's now take a look from an operational point of view at what we can expect this week. As we were saying about this recovery, let me start as usual with the Nasdaq. We can see that it opened with a gap going straight to test today's expected low around the 21,570 area, only to then completely recover this gap. And now it's actually trading above Friday's close. So basically, the global indices are now somewhat aligning with what the Tel Aviv Stock Exchange had already done in advance. So we need to keep a close eye on this. In my opinion, the situation hasn't really changed much for the American indices because basically both this has arrived. In short, the reaction was rather restrained. There haven't been any excessive upward moves. At this point, we've basically recovered about half of this range, which we can expand, because if we look at it on charts with a broader perspective, say a 30-minute chart, we can get a slightly wider view. So there have been some bouts of excess volatility that tend to break out of this range, basically swinging from one side to the other. But then whether it's upward or downward, the price tends to refocus within this range and move sideways, essentially. As we've said, the news coming in right now is what's acting as the market mover. So at any moment, a new attack or an Iranian response could occur, and this would certainly lead to increased volatility. That's why I always recommend setting stop orders automatically, because we are in a period where news can break at any time and we might not be prepared or ready to exit our positions, essentially. So as we were saying, it's moving within this range. So let's monitor the downside at 22.5 as far as the Nasdaq is concerned. And on the upside, let's keep an eye on the area around 130 more or less. As long as we stay within this range, obviously in the upper part around 22.050, 22.060, you can try some short positions to the downside. Of course, if it comes back to retest the area of the lows recorded last night, which then become with those recorded on Thursday more or less, and it could definitely become probably a good buying opportunity. We'll see then what news might come out and whether there will be any news that will trigger these movements. At the moment, the market and the markets are recovering from this loss caused by, well, the events that happened over the weekend. Let's move on to ES, which is obviously in a similar situation. It too has largely recovered the gap left overnight, with ES also testing the VIX level, so in the VIX area hitting a low before rebounding. Right now it's trading above Friday's close, so this could definitely be a positive sign, maybe even for a test of the highs, especially since ES is also subject to the same dynamics as the Nasdaq. As we saw earlier, this is a 5-minute chart. Since there's less volatility, we can get an even clearer picture than with the Nasdaq without even changing the reference time frame. So to the upside, we are monitoring 6,080. To the downside, 5,960 and 5,950. As long as we stay within this range, we'll obviously stick to our range strategy exactly as described in the textbook and as we've said and reiterated many times. Let's move on to the other two American futures, starting with the Dow Jones. Here it is, and as you might expect, it's in a similar situation. Right now we're trading above Friday's closing levels. The Dow Jones has recovered those levels and is likely aiming for a test of the highs recorded in this area here, so 42,750, 760, which could then push prices into this area here, 42,943, zero, which is definitely an area that sellers will defend for various reasons we've already mentioned. Look at this this low recorded last night, how it formed a double bottom with the lows registered on Thursday, only to then rebound. So if this pivot at 42,750 is broken, in my opinion, there is a good amount of room for an upward move. We could see a jump to around 42,500, so another 600 or 700 points from this level would bring prices to 42,300, 42,200, 42,300, which more or less correspond to these highs here. Let's obviously also take a look at the Russell. Here it is, which is in a more or less similar situation. Right now it's working around the Friday's close. Here too, a break of this level could first of all bring prices back into this trading range, with possible moves up to 160, 200 or so over the course of the week, maybe even testing these areas at the highs recorded in recent weeks. On the downside, of course, we're keeping an eye on the low that was recorded last night, which seems pretty solid to me, and then also here with the area of the lows that were recorded on Thursday. So at the moment we're back within the range. Basically there was this scare, but honestly everything has pretty much settled back down. We'll see in fact that oil also made a similar move, but now we are looking at the DAX, the European index, and here too I was expecting a somewhat bigger reaction. However, the index obviously doesn't open at midnight. The futures open at 2:15, so the situation had already started to settle a bit with some recovery. Still, it opened with a gap, only to recover it quite substantially. Right now it's trading well over 100 points above Friday's close, so at this point there could even be an attempt to reach the highs recorded on Friday in the 23.4, 23.6 area. Let's obviously take a look at oil necessarily. Obviously the effect was the opposite. In short, with an opening belly gap and the price that went to stay 78 and 50, going in short, even in short, to open almost on the highs of the day, of the expected highs of the day, exceeded only to then return to them in short, and then the movement in short was downwards until it once again returned to this range that had been created in this area BC3 levels. Well, even here I think it's unnecessary to say that at this point the technical aspects on this future, so on this type of commodity, really matter very little. What matters right now are the news coming from Iran and basically from the Middle East. So maximum attention. In any case, let's give definitely some guidance. I expect basically a holding at 71.80, 71.90, because I don't think really that the situation there in Iran can be resolved quickly. Basically, if Iran accepts this form of unconditional surrender, we could see in short a drop in oil prices. But if that's not the case and they try to react, or, well, there are really so many variables to consider, so maximum attention, guys, on this instrument. I repeat, for the upside at this moment, leaving aside this spike that happened at the opening last night, I would continue to monitor 75, 76 on the upside. On the downside, we are looking at around 72.70 as the central area, and then we also have this further reference point around 68, which is definitely the level that should try to stop any potential breakout from this first level mentioned earlier. Let's obviously also take a look at gold, which continues a bit. It's pulling back. Nothing excessively dramatic, but the movement, well, it's pulled back a bit. It went down to the 360 area, and it's found a new base again here in this area where it had previously settled, which was our first stronghold at 360. Then If it drops further 3280, a level that has been tested several times. On the upside at this moment, well, we're working. We can look at for the week, in my opinion, around 3420, 3380, 3340, 3320 more or less as a range, and probably we'll see movements at this level. Obviously a breakout above these maximum levels could easily bring the price back to retest the high area, or the same applies on the downside. A break of this area here could easily bring prices back to retest the 3280 area, as I mentioned earlier. For SPX, situation is similar. Let's see how the market opens now, but basically it remains in this sideways range with these ups and downs, these gaps left here and there, mainly as a result of the news that's coming in. So these somewhat abrupt movements happen, and since this is an instrument that's not open 24/7, it's a bit harder to get a clear picture from a charting perspective. However, essentially the area around 5950, 5930 is definitely the key area to watch. On the upside, obviously the first obstacle is 6020, 6025, which we need to try to break through. Let's also take a look at Bitcoin, which, well, yesterday, or rather over the weekend, dropped below 100,000. So that's quite, well, concerning in the sense that it's a big round psychological level to hold. In fact, it dipped below that level, but then managed to recover and is currently at 101.9. So it has basically regained the day's range and is now trading above the BC3 levels. On the upside, let's keep an eye on this level here. So between RD2 and the 1D max area, which is around 103, 103.5 roughly. On the downside, let's first monitor this PV here right around the 103.5 area, because if it gets broken, in my opinion, we'll go even lower below the lows recorded yesterday, Sunday, since obviously, well, Bitcoin stays open even on Sundays. Perfect. With that, we've reached the end. I'll just add a brief, a small appendix about the pro service that was just launched. I'm also launching the channel where, of course, members will have access and where you can write and ask questions about the tools offered by the pro service. So we'll have a chance to interact and discuss things together. I'm setting it up, but I haven't finished everything yet. However, I plan to have it ready by the end of this week. I've already added you to this channel, so we'll have the opportunity to discuss how to use and make the most of these tools. Of course, I will also provide in this chat, which is dedicated to this pro service, some guidance or practical tips whenever the market offers us good opportunities. And with that, we've reached the end of this weekly analysis. As always, I invite you to leave a like on the video, follow me on social media, and we'll catch up later in the chat. Thank you all for your attention.